Thank you, Peter. I appreciate it. Thank you, James, also. Bank of America is really proud to be one of the sponsors of this report. I said to James, I think this conversation started 2 years ago, actually, when we were having lunch. And when he mentioned that this was research that they were thinking about, I thought, as the bank did, it was an incredibly cool, I'll use that as a baby boomer term, even though it's more of a millennial term, an incredibly cool set of research when you think about the topic of longevity and the positive impacts of longevity. So as a bank, we're quite interested in this, but I just don't want my talk to be about why is Bank of America interested in this, I think, and we have others in the audience from Transamerica and other firms. This is more of an issue of interest to financial services in general as an industry, not only in this country and the world. When we think about ourselves as a bank, our interest in this is having 200,000 plus employees of all age generations, serving over 50 million consumer bank customers, again of all age generations, serving 5 million plus plan participants in retirement plans, again of all age generations, and then serving over 1 million businesses. And there are many businesses being formed by people in their later stages of their career, moving on to do sole proprietorships in small businesses. So this is a tremendous issue of opportunity. As we look at it, 10,000 people turning age 65 every day in this country presents an opportunity. 2 billion plus people that will be over age 60 in the world by 2050 is an incredible opportunity. And then obviously in the financial services industry, already a part of the economy that's $7 trillion plus and expected to be over 50% of the GDP of the United States by 2032 is an incredible opportunity. We service, as we said, people that are in the consumer side, in the retirement plan side. So I wanted to focus my comments playing off of the wonderful work that Peter did and the study did of the 3 segments described in this report. Talk about producers, talk about consumers, and talk about the redistribution in later years. First, in regard to producers, we did some research a few years ago about people's attitudes of working as they approach what was at that point traditional retirement, and what did they think about working beyond that. And one of the first things in the study we found that was incredibly interesting was 72% of people in the study said they wanted, not needed, they wanted to work post-retirement in a traditional retirement. So then we asked, why? First and foremost, they wanted to stay mentally active in, quote, what was a period of retirement in their life. It was a top reason. Alongside of this, when we asked them, what are your top 10 concerns as you advance through life in terms of your life and living, in terms of things that may happen to you that aren't great, the number one concern by far was Alzheimer's. The other 9 did not even add up to the percent of people that answered Alzheimer's. If we had asked that question 10 years ago, that would not have been Alzheimer's. It was cancer. It was heart disease. It was things like that. So staying mentally active was the number one. 47% of today's retirees said that they've either worked or plan to work during retirement. So they're already doing it. They're already finding ways to do it. If you even look at the age 55 plus population, which is still maybe a pre-retirement population phase, 40% of the people age 55 and over, regardless of age, are working, which is up 8% since 2000. And an interesting dynamic that in the last 7 years, workers age 55 and over have accounted for all the workforce growth, where the number of workers under age 55 has actually fell. So there is an issue here in terms of, for the labor force, and as Peter talked about, that not only do people want to work, it's an important thing in this country when you think about the economy that they do work. And the other thing we found in this study is we looked at how people viewed their lives. In the older years, people would say, I go to college, hopefully, or school, I graduate, I work. I work a long period of time. I retire, cease working, and then I go through a phase of life to wind down, and then I go from there. What we found in the studies we did of late is the view of a life stage is much different now. I may go to school, I may start to work, I may take a break during that, I may go back to school, I may do something more in my career in the middle years. companies we just formed a sabbatical program. I could move on a little bit further in my career. I may take a sabbatical and do something else. I move on in my career again. Now I hit what is traditional retirement. I don't traditionally retire. I may go off and do something different ever. So the life stages now are broken into much smaller components of, in the past, which were 3 or 4 big bulks of what a life stage was. So what we found with returning retirees is they're 5 times more likely to work part-time. So one thing people did say is, it is not necessarily as I work into my 70s or even my 80s, I'm going to want to work 40, 45, 50, 55 hours a week. But I want to do something weekly with some control on how I do that of some stage of the week. 3 times more likely to be self-employed. We see this, we have a small business banking unit that we bank over 3 million entities. 2 million of them are sole proprietors. They're individuals. And many of them are people, we found this in the age 55 population, is the fastest growth in those businesses of people establishing their own businesses in some way and doing that. And then 66% said that they thought working in retirement delays the decline of their physical and mental abilities. So they're correlating it to wanting to live a longer, more productive life. So we think it'll be increasingly unusual for retirees, traditional retirees, not to work. We've even, with employees that have retired, have engaged them in volunteer activities. So even if they don't want to work per se, they want to do something. And our retiree base has become very active in volunteering in their society of where they are. The other topic I want to talk about in this producers group is about caregiving. So I'd ask in the room, how many of you have done any form of caregiving with an older one? Absolutely not surprising. I asked that question and basically most of the hands go up in the room. So when you look at aging producers, there's the issue of caregiving that comes up. There are 40 million caregivers today in the country. Millions upon millions being added every year. Caregivers are being added at a far faster growth rate than new parents growing in society. 96% of Americans agree that caregiving involves much more than hands-on care. The thing we've studied of late is the unstudied element of financial caregiving. 92% of caregivers are saying in some way they hold responsibilities as a financial caregiver. My father recently passed away 2 months ago. I was his financial caregiver because he thought I was in financial services and I should be the caregiver. I will tell you, being in financial services does not necessarily mean you're well equipped and understand what it takes to be a financial caregiver. There is a lot of responsibility and things you have to learn along the way. Also, we see there's financial coordinators and financial contributors. So financial coordinators may not necessarily contribute their own assets to help the loved one, but they're doing a lot of the work. They're helping to pay bills. They're organizing the finances of a person. But financial contributors are actually contributing monies of their own to help their loved one. In our study, we conservatively estimated that at $7,000 a year. In many cases, those weren't expected contributions people thought earlier in life they were going to make. They're going to make them for their loved one, but it presents a different issue. So people want to give help to loved ones. They want to do it in any way, but the issue we face as an industry is how do we help them plan and think about it far in advance in terms of being able to do this. When we did this caregiving study, there was a lot of commentary by people that it is a stressful period. It is a stressful period because you're trying to take care of someone. It's a stressful period because obviously in many cases you're facing an end-of-life situation coming of a loved one. But 91% of the people said they would do it again. No matter what the stress, no matter what, they would do it again, and they would gladly do it again. So one of the things we feel in the caregiving subject that needs to be done here with the Longevity Society is, in essence, how do you give a toolkit to help people think about and prepare for caregiving? At the bank for our employees, things we're doing is, how do you help people with emergency backup care? How do you help people make assessments of facilities if their loved one needs to move to assisted living or a nursing home facility? You know, in my dad's case, we had to move him in a matter of 24 hours. I mean, no one's expert here on what's the right assisted living facility to do that. Giving them help on that. Legal documents, power of attorneys, wills. I recently dealt with an insurance trust. I didn't realize how that worked. How do you help people with that? And then networks of employees, parent and caregiver networks. How do you give societies of people that they can interact with others that have been through this? And obviously financial planning. So let me move on to the second big topic, which are consumers. Now, this is my standing up here as Bank of America. I could stand up here as any other bank. Of course this is of interest. When you look in the report that $4.6 trillion of consumer spending will happen due to the longevity economy by the year 2032 for people age 50 and older. My wife's not here. I like to joke we live in New York City. My wife is a very vibrant contributor to the economy, the longevity economy, and she's quite proud to do it. And I enjoy that. I think that's great. But if you look at the over age 60 group, their spending power will reach $15 trillion globally by 2020. The over age 60 population, 75% of healthcare spending, obviously. But then you look at the senior living market, $500 billion spent in the United States today. It is not a cheap proposition here, even with some of the social programs, and it is growing. But consumer spending for people over age 60 rose 50% faster than people under age 30. So when out there, vibrant, living, whatever, they should, spending their money and doing the things they want to do. So we view this as a tremendous economic opportunity, but we also view it as two areas of concerns we need to watch and deal with. One is the issue of health. Obviously, as you approach this period of later life, and we do studies of employees, the number one thing they say in every study that is their concern, even as an employee, is the cost of health care. Now, it's moderating in many ways. There are programs being done to moderate, but they're concerned about the cost of health care while working. And then they equally move on to concerns about do they have enough for health care post-working when you see the studies of how much money you need. So with rising life expectancy, some of the issues I said, certainly issues of Alzheimer's and cognitive decline, the issue there is you could live physically long for a period of time, and unfortunately in other aspects of your life, you don't live as vibrantly, and it presents a whole array of issues in terms of your care and your cost of care. So health, managing health care issues, ability of people to save monies, accumulate monies earlier in life towards that, long-term care, things like that are important elements. The second big topic we would like to focus on, which is incredibly important, is elder fraud abuse, elder financial fraud abuse. This is, unfortunately, and becoming a burgeoning subject and topic in the banking financial services industries, in Washington, obviously with policymakers. It's a great interest, as it should be, to FINRA and other agencies. We had a session at the Philadelphia Federal Reserve that the Philadelphia Federal Reserve President, Patrick Harker, said, financial exploitation of older Americans is an issue for regulators in the industry alike. And it is. Elder financial security, elder financial fraud and abuse is an issue that could conservatively be estimated to be $3 billion annually right now, maybe all the way up to $36 billion. And here is the sad thing. The majority of elder fraud abuse is by family members. When my dad died, I actually wrote distributing assets to my sisters, and I wrote a check from a joint account we had to my sister who has a different name, Bank of America. It was good. They called me and they're like, we're questioning this. And I said, and I know why you're questioning this. Because people, they want to make sure that there is more controls and things in place to make sure that they're accounting for and helping people. There's even situations now, if you look at, we've had this in retirement plans, what if someone's already all of a sudden taking a set of distributions from a retirement plan that they haven't done before? Why? Or ATMs. What if someone goes to the ATM 3 days in a row and takes out $500, but they haven't done that really for years and whatever? Now you get into two issues there. One is having the detection tools to understand it, but you do get into an issue about questioning it and to what regard do you question it, and having the right relationship set up, not only for the person you may be questioning, but third-party access and other things to get that help. So the other thing I would say in elder fraud abuse and financial fraud and why we think it's an important issue is, in many studies, the first issue with Alzheimer's cognitive decline that you see is not being able to handle your finances. I saw this with my father. I mean, he was a CFO of a telephone company, and all of a sudden he struggled. And I got his checkbook after he died, and you could see at the end, he just couldn't fathom and whatever. That is a first sign, usually, of something maybe going on. So across the enterprise, what do we have to do about this? we now have to train financial advisors on longevity. Not on the basics of wealth management. That's fine. That's great. Not on, how do you use managed portfolios, whatever. We actually now have to train financial advisors. In 2000 are trained on the topic of longevity. How do you deal with clients that are living longer? We have a gerontologist actually on staff. 10 years ago, I don't think we ever would have thought about hiring a gerontologist, and we have a gerontologist on staff. On caregiving, how do we help employers create benefit programs to help people so they're not stigmatized that they need to take time to take care of their loved ones as employees? I would also argue, there's been a lot of great work done on leave programs for younger parents when they have children. That's great. We need to do the same and have leave programs for people in their middle-aged career that need to be at home and take care of people for a period of time and be there to do that. And then the last topic I want to talk about is redistribution. Again, near and dear to the heart of wealth management and what happens with these assets. The average age of a Merrill Lynch wealth management client is 65 years old. Right there, dead in the center of the issue. The average age of a 401k participant we service is 45 years old. So redistribution, wealth accumulation, later stage of life is hitting here. Retirees account for less than a third of the adult U.S. population, but they contribute over 40% of the dollars given to charity, and they also volunteer. So there's an element in redistribution that is not just inheritance redistribution potentially, but it's also the element of staying active and wanting to give. And what we found in all measures is they feel as much later in life of wanting to give back if they have the ability to do that to society, to places, than necessarily just having monies and saying, spending them and where else they give them. So volunteerism is very high, helping people in need is very high. And interestingly, a study we did, retirees were 6 times more likely to define their success by generosity in whatever they did it than their wealth. Now, having said that and moving on to that, there is the issue of still women outliving men, which is that's a great thing in some regards, but there's an issue in terms of wealth redistribution that financial services now has to aggressively make sure they understand about that situation of when women are outliving men, the wealth transfer to women, and also obviously the diversity in wealth management needed about servicing in terms of the customers they service with the right diverse population to relate to their client. So that's another issue that we're addressing here. And then the last thing I would say about the gender issue too is in terms of women versus men, they live longer, but there's also the issue too that some of their responsibilities are much greater than men, particularly in terms of like caregiving. When you look at who physically does the caregiving for people, we have found disproportionately that is on women versus men. So in summary and closing, I would just say, look, there's tremendous opportunity here in all these things for the public and private sector to come together and help on these. We definitely have to be focused to help protect people as they live longer in life so they can do what they would like to do. We need to work with companies in terms of their benefit programs and other things to allow people earlier in life to accumulate savings and do what they should do. And I would end with what I started with. This is not just a Bank of America thing. This is an issue for financial services industry to work in partnership in Washington and in states. So with that, thank you very much, and thank you for the opportunity.